how much is the Chinese economy slowing, and how much of that is easily improved if the trade deal is done?
Well, we have Chinese growth coming down to 6.2 from 6.6% last year. So it is a slowdown. And the trade deal, we think, will make some marginal differences, but the Chinese economy is slowing. And even though there's some stimulus, it's not the shock and awe type of stimulus that we've seen from China in the past. So I think the market is expecting something on tariff. It's the non-tariff issues that seem like they will be much harder to address.
I mean, Barry, how do investors navigate then the next 30 days? Secretary Mnuchin said there's a plan when it comes to China and meeting that deadline. But, you know, it's a risk that they can't get it done and those tariff rates go up.
No, it is for sure. I think stepping back from all this and thinking about the broader picture in China is important, because Caterpillar really, business is dependent upon Chinese investment. Chinese investment went through a massive hard landing from mid-2014 through early 2016. Revenues and earnings on the Shanghai Composite dropped from plus 10% to minus 20. They had a heavy industry hard landing. They then tried to re-stimulate that a bit, but investment has been slowing in China throughout the better part of the last year, and it's not going to rebound. But Caterpillar's business that's only 5% of their business. I listened to the call today. The real issue with China right now is the export sector. So the number last night that was probably more relevant than any of this was Hong Kong export and import data, and it was definitely weak in December. We knew that, though. I would think there'll be something of a rebound in January ahead of the Chinese New Year at the beginning of February, but we're going to have a lot of uncertainty with respect to this trade channel for the next couple of months. The good news, though, about all that is it's just not as important for the rest of the world as their investment. Their investment was drawing products out of everywhere in the world. They sent Brazil into the biggest recession they've been in 50 years during that 14 to 16 collapse. So this impulse is not going to be nearly as much of a shock. And that's, I think, why Mike rightly pointed out the market rebounds from this, because the market gets that this is not as big a deal as what happened in 14 to 16.
Mike, we're also now, the market is able to look at the nuances of individual company reports. And there were differences. NVIDIA was a top-line miss, whereas CAT's was an EPS miss. And again,
sure,
that kind of differs a little bit from the Apple guidance that we got that so spooked the market at the start of the month.
It did. I also think Caterpillar's guidance for the rest of the year was a little bit downbeat and all the rest of it. But no, exactly right. And also, by the way, both of these stocks up significantly off their lows, certainly not nearly where they were at their highs last year. So I do think that's the game we're in. I think the tone and rhythm of earnings season changes as it goes along. And last week, almost everything got rewarded unless it was a huge miss. And maybe it'll change a bit this week. But I do think that the market is essentially traveling in different directions based on what the results were. And by the way, today's the lightest day of the next 4 for earnings. So I think we're going to get more of a critical mass the next 3 days.